Are you able to hear me?
Yes, I can hear.
Okay.
Yeah, do you have any questions from the previous class?
Yes, so far so good, Guru.
Okay,
Good.
fine. So till what point we have finished? We have just finished the basics, right, of options.
Basics of options, correct. But still, we are good to go many things, right? Like the Greeks and other.
Those are
Uh,
actually see Vijay, those are actually the theoretical part. They are not used in trading. So if you want to
okay,
study, you can study yourself. Those are not useful in trading.
I see. Okay, so
First,
we don't have to take all those into consideration then.
no, no, no. Those things are not needed.
I see. Okay, all right.
Okay, so we have finished the option chain, right? The last class.
Correct.
Okay,
Option
so
chain we have done. Yes.
so today I'll show you some charts and tell you how to find the strike price, which strike price we should choose based on the trends and based on the charts, right?
Okay.
So any specific stock you want me to choose to?
Yeah, sure. Like, can we choose Mara? Yesterday was the same only.
Mara is trading in future and options,
Options as well. Yes.
but I think the chart is like yesterday we discussed, right? Same chart, no?
Yeah, same chart.
Okay, fine. I'll just share my screen.
Yesterday we spoke about the stocks.
Yeah. Okay. Yes. So, so again, here also one thing matters like what type of trading you want to do, intraday or positional. Based on that, you have to choose the time frame. First, you have to choose the time frame, right? So, if you are
Okay.
looking to do for positional trades, then you have to do check the daily time frame, right? For
Daily time.
positional
So
trade.
position. So here we have 1 week. So we should be doing it within the week.
Yes.
So in case if we take on Friday, sell on Friday, is it good or like take on Monday, Wednesday? So which is better actually?
See, based on the charts only, we will decide when to take those
I
strike.
see. Okay. I see.
So, based on our inputs, right? Our inputs will be purely based on the charts.
Okay. Right.
Okay. So, either you can choose 1 hour chart or you can choose 1 day time frame. Two options are available to use in option trading. Right.
Okay.
Let's try to use 1 hour chart, right? Okay.
Yeah.
So, here we will try to use the Bollinger Bands. Okay. So, I
Okay.
will plot the Bollinger Bands. Right. Okay. And then we can plot the pivot points as well.
Okay.
Right. Okay. So now, first of all, you have to see the trend. What is the actual trend of the stock, which is currently going on, right? So
Yeah. Okay.
to see the trend, first you have to see the trend. Then you have to find from the daily time frame only. Daily time frame only will confirm you what is the current trend going on, right? So here you can see
Okay.
that we are near the lower Bollinger Band, near the demand zone, right?
Okay.
And second thing, you can see a doji is formed here, right?
Doji is one. Correct. Yeah.
There was a downtrend and we have a doji form. That means there are chances of reversal from here, correct? Based on our
Okay.
technical.
Yeah. Correct. Yeah.
So that means that we are looking for this stock to go towards the upside.
Okay.
First thing that we have to analyze from our charts. So this is the first thing that we
Okay.
put from our chart is like we are looking to analyze it like this stock should go up in
Upward.
maybe like 1 day, 2 days, or 3 days, or 4 days. Or like maximum time frame is 1 week, right? So considering 1 week,
Okay.
we are thinking that
Yes,
this will go upside, right?
stock will go up. Okay. Yeah.
So now we have to see like till what point the stock can go, right? The stock can go either this one, which I have explained you, and the second destination is this one. There are two destinations, target one
Right.
and target two,
Yes.
right?
Yeah.
So we should try always to choose the target one because our time is less, right? We have only 4 to 5 days of time, right?
Right. Right. Yeah.
Target two, you can choose if you have more time frame, right? Like 2 weeks or 3 weeks, like that, right?
Okay. Yes. Correct. Yeah.
Because there in US, I think you have only weekly expiry, right? Every week you have
Only
expiry.
week. Yes. Only weekly expiry.
Only
Correct.
weekly, no monthly expiries are available, right?
No. Yes. Yes.
Okay, fine. So then what you can do is that if you want to achieve target two, then the best thing is to choose the 1 hour time frame. So from 1 day time frame, we have analyzed that the stock may go towards the upside. Now we have to go
Oh,
to 1 hour time frame and see the targets, right? So we can think here also as our targets. The blue
middle
line,
median.
the middle line, and the
Okay.
this line 17.5, right?
Target
So
one, target two.
we will note down actually the target one here is coming around 16.5, right?
Correct. Yeah.
And target two is
17.25 something.
17.25.
Yeah.
And let's see the target one from daily time frame as well.
Okay.
It is 18, right?
Yeah.
18. So we'll note down all the three.
Okay.
So that means our target three will be approximately 18. So these three will be our
18.
targets, right?
Okay.
So now based on these targets, you have to choose the options, right?
Okay. So
So first,
18, how did we choose 18? Like is the previous high?
the blue line of daily time frame, right?
Yeah,
That
that is 17.25. The
here,
blue, the middle.
here. The daily chart. Daily chart is also there, right? For daily chart, the
Yeah.
blue line is 18.18.
Correct. Yes.
So two targets I have taken from hourly chart and one target I have taken from the daily chart.
Okay. So hourly chart also. So hourly chart, we have to take only the middle one, is it?
The first target is, see, I have taken target one, which is
Day.
the middle one from 16.5 and the upper Bollinger Band 17.25, right? Two
Okay.
targets.
That is the day time frame.
No, these two are hourly. The first two are hourly, right?
Oh, but you have chosen day, right? Like if you see the chart, it is looks like it is day.
Wait, I'll show you again. So this is my daily time frame, right?
Yes.
And this is my blue line. So target is 18, right? This is 18,
Correct.
correct?
Yes.
Now,
Right.
now I will go back to hourly chart. Okay.
Okay. Okay.
Now the middle one. So
That is 17, up 16.75 something.
16.75. Target two is, sorry, target one is 16.75.
Okay.
And target two is this one here, right?
Oh, I see. Okay. So, okay. Said. Okay. I understood. Yeah.
17.5, right? So
Yeah. Yeah.
whenever the stocks tries to move toward the upside, the first target will come this one, then this one,
Mhm.
and then the third, which is 18, right?
Will be the day time frame, the middle. Okay.
Right. So
Okay.
T1, T2, and T3, we have our three targets, right? So we have to
Right.
focus on only three strike prices.
Okay.
Okay. So now it depends on your risk appetite, like which strike price is how much is the premium of these strike prices, and
Okay.
what is the lot size? Can you tell me? Can you check and tell me like what is the premium and lot size of this stock?
Yeah. Give me 1 second. I'm just noting it down.
Yeah.
So, taking the current week, right? It's to expiry will be tomorrow,
Mm.
or you wanted me to take the next week?
Okay. Okay. Tell me one thing.
Uh-huh.
The expiry is tomorrow, right? So if I want to buy for the next week expiry, can I buy today? No.
Yes, yeah, we can buy. Yes.
Then we will try to buy the next week because here we have only 1 day remaining, right?
One day. Yes.
So we'll
So
not.
next week expiry is next Friday, which is 8th of August. So
Hmm.
like we have in which price should I select? In date, out date, like in the market, at the market.
We have three strike prices here, right? We have chosen three targets: 16.75, 17.5, and 18, right? So based on this, we have to select the strike prices.
Closest to that, you mean?
Ah,
So 18, 8, 16.6, which we should take? Like 17, there are like I have 17.5, 17, 18, 16.5.
then first is 16.5, which is the nearest one, right? How much is the
Yes,
premium
yes.
for that?
Is it for a call buy, right?
Call, yes.
Call ask will be 0.58. Ask.
Okay. And 17?
17, it is 0.39.
0.39, right?
17.5, it is 0.27.
Okay, okay, I think that's sufficient. So 16.5 must be the at the money, right?
16.5 is at the money, correct.
At the money, correct, right? And these two are the OTM, right?
Out of the money, correct.
Out of the money, right? So the
And this is for boss, for ask. This is for ask means like bid is this for uh,
no,
selling,
that is
selling, right?
no, that is fine. That may not be much difference, right? Bid and ask may not be
3
having much
cents, 2
difference.
cents, 2, 3 cents, 1 or 2, 3 cents difference.
Okay, that is fine, right? So we are just I'll just explain you with this only. So
Oh, right.
so so what is the current price of this stock? The current future price?
Current strike price, current price buy is 16.27.
The current future price, right? You are telling me the current future price, right?
Bu-
16.27.
Buy price, current buy price.
No, no. See, there are two things. I have told you yesterday that we will have two things. One is equity, which is cash, and
Yes,
other one is future.
correct.
So cash is called as spot, and future is called
Spot.
as
Okay.
future. So the
Oh,
one
this is spot. This is spot. Equity spot.
I want to know future price.
Okay. How do you know future?
You can write like Mara and future.
Okay.
FUT will be shown there in front
I
of
should go
Mara.
and query for.
Okay, it is not visible there, like in front of you, you cannot see like
Yeah,
the future and all.
it is not visible. Yeah, it is not visible here. It is only showing Mara,
Okay,
Mara holding, and then
okay, no problem. Then I'll explain
future.
you with this only. Then no problem. I'll explain you with this only. So see,
Okay.
there may not be much difference in future price and the spot price. Like there may be like point 0.1 or 0.15 like that. There may not be much
Okay.
difference, right? So you
Okay.
should always
Okay.
consider the future price whenever you are trading in future and options. You should always consider
Okay.
the future price to calculate like which option you have to buy, right? And what is the lot
Okay.
size?
It is 100.
100. Lot size is 100, right? So let's say
Yeah.
you want to buy a strike price of 16.5. Then in that case, you have to pay a premium of 100 into 0.58,
Right.
which is coming around 58.
Right.
$58, right?
Okay.
$58
$58 for one lot.
for one lot. If you are trading in one lot, you have to pay 58. So that is your premium that you have to pay, right?
Correct.
Okay. So the current price is 16.27 and the one which we are buying is 16.5, right? Once we do a minus, how much it will come?
16 point. Now it is 38. Now it is 16. Let us take 16.27. 23. Yeah.
0.23, right? So that means in 0.58, in 0.58, 0.23 is
Okay.
the time value, 0.223 is the time value, and point, how much is the remaining?
Out of that 58, you mean?
Ah,
Okay. 30, 35.
0.35, right? So 0.35 is the intrinsic value and
Okay.
0.23 is the time value.
Time decay or time value. Okay.
Time decay or time value, right? So once you reach the expiry, this value will become zero. If
Okay.
if this stock will not reach 16.5.
Okay.
So that means if the stock remains at 16.27,
Okay.
then how much value you will get? Wait, I'll show you in Excel. 1 second. Excel calculation
Yeah,
will.
that will be better.
Uh,
Yeah, that will be better. I can also note
yeah.
down if it's
Yes.
in Excel.
Because here I may also forget, and you may not able to
Exactly. And
catch
I
it.
want to, yeah, yeah.
Yeah.
I'm just like noting it down. If it's in Excel, I can just copy it.
Aha. Yeah. Yeah. Right. So the premium is how much? 6.58, right?
But yeah, I'm not seeing your Excel actually.
1 second. I'll just share this. Now can you see?
It is actually starting to, yes, now I can see. Yeah.
The premium is 0.58. Strike price we have chosen 16.5, right?
St- Yes, 16.27 actually, strike price.
No, strike price 16.5. That is the current value, right? The current price is
Yeah, yeah,
16.27.
27. Current price is 16.
Uh,
Yes,
and we have chosen 16.5, right?
5 is a strike price, correct.
Right. So what was the formula I told you for 1 second, I'll help you with the formula. You can note down the formula first.
Okay.
1 second.
Intrinsic value, time value,
Uh,
premium.
so intrinsic value is the gap between strike price and the
Current price.
current price. So what is our option strike price in this case?
Strike price is 16.50.
16.5 minus and the underlying assets current price which is 16.27, right?
Yeah.
So
So which
the
is the premium?
this
Premium.
is the yeah. So this is the
So sorry.
intrinsic value. This is the see this I have done strike price minus current price.
Okay.
This current
Strike
price
price
means
minus current.
the one which we have taken from the future, right? 16.27. So
Okay.
this
Okay.
minus this, I will get the intrinsic value which is 0.23. Now I want to calculate the time value. So that I have to
Okay.
calculate by 0.58
Okay.
minus 0.23.
Hello.
Yeah, can you hear me?
Yeah, it's some interruption. Now it's clear. Yeah. So intrinsic value is equal to strike price minus the current
Current
price.
price. Yes.
Okay. In this case, 16.50 minus 16.27.
Yes.
Okay, which is equal to
Mm,
0.0.23. Okay.
mm. And the time value is 0.35, which is 0.58 minus 0.223.
Okay.
So this
One
is
second. Let me know the
uh, so,
time value.
so this is the total premium that we are going to pay here.
Time value is equal to
Premium
premium
minus
minus intrinsic value.
intrinsic value. 1 second, 1 second. Let me reconfirm intrinsic value equals to
Mm,
premium minus
Intrinsic value is 0.23. 35, right?
hmm, yeah, correct. Point.
All right. Yeah. That's,
Okay, this clear?
yeah, this is clear. Yeah.
Okay. So now since you have chosen the strike price of 16.5, right? So your option or a stock should have an expiry of at least 16.5 plus the
Okay.
premium you have paid, right?
Okay.
At least if the stock reaches to 17.08, then you will be in no profit and no loss because you have paid a premium of 0.58, right?
Correct.
So
Right.
what I have done to calculate this, I have added the strike price which you have purchased plus the premium.
Okay.
So
Okay.
this I got 17.08. So your expiry has to be beyond
So,
17.08 so that you can make some profits.
so the cost price will be and current price plus the strike. No, no.
No,
Strike price plus the premium.
current price will not come now. Now the strike price, whatever you have purchased, right? So you have purchased a contract of 16.5, right?
Yes. Yeah.
And yeah, you have paid a premium of 0.58, correct?
Yes. Yeah.
So
16.5
16.5 plus 0.58.
point 0.58. Okay.
So the stock should expire beyond 17.08 so that you can make at least some money.
Correct. Including our commission like premium, we can get that money. Okay.
Yes. If stock expires at 17.08, then you will get whatever you have paid minus the brokerage charges, whatever the brokerage charges you have paid, that will
Correct.
be
Yeah.
subtracted, right?
Right. Yes. Yeah.
Right. And if the stock expires below 16.5
It's a
or below
loss.
below 17 point, let's say the stock expires at 17, right?
Yes.
Then how much you will get?
Zero.
16
We
point
lost.
16.5 like 17 minus 16.5. You
Yes.
will get zero point 0.5 back.
But again, the premium is lost, right?
You have paid 0.58 and you got only zero point 0.5. So you are in a loss of
8
0.08.
cents.
Yeah.
Correct.
Right. Okay, this clear.
Yeah. This is clear. Yeah.
So beyond this
So
value,
what is this? Why we should consider IV and time value? Just to
to
know, or is
calculate,
like is it
just to know and calculate like how much we can make the money and how much the option price should expire so that we can make some money.
something coming up? Yeah.
Okay,
Good, right? Yeah.
so we should know about
Uh,
intrinsic value and time value, right? Because so that
right.
we can calculate like on expiry, what will be the expiry. Based on that, we can calculate how much profit we can get or how much loss we can get. So just for the calculation purpose, we should know about that.
Okay. Okay.
Because premium is a combination of intrinsic value and time value.
Right. Yeah.
Okay. So this concept is clear.
Yes. Yeah. This is clear. Yeah.
Okay, fine. So here we are choosing 16.5, right? Strike price. So that is why we
Right.
are choosing 16.5. So the expiry has to be beyond 17.08, right?
Zero. Yes. Then only we'll get the profit. Yeah. Gain.
And what targets we have chosen? One second, I'll share the trading view. And we have selected the targets as 16.8 and here 17.4341. So we have
Right.
to keep this target at least T2. That is why
Okay.
we are checking the hourly chart. So
So
we need
let
to
us.
keep this target
Okay. So
17.42.
T1 T2 T1 is will be 16.75
Huh.
and T2 in this case will be around
Uh,
1740
so
something.
so we will calculate for both, right? I'll just show you the Excel sheet and we will calculate for both. Like if the
Okay.
premium expires
How
there,
much
how much profit we can make.
for okay. And how much is daily T3?
That is
17
18,
point
18, 18,
17.8. Well, 18. Okay.
18,
Yeah.
yes.
Okay.
So T1 is 16.5, right?
Yeah.
And T2 is 17.4
Yeah.
and T3 is 18. You can see the Excel sheet, correct?
Yes. Yeah. I can see.
Okay. So we have purchased 16.5. If it expires at 16.5,
Okay.
Profit and loss. So we will get 0 rupees back. Our whole premium will be gone. 16.5. The same, whatever strike
Mhm.
price we have chosen, the same
Okay.
strike it expires. We will get
Right.
zero refund. So our loss will be 0.58.
0.08,
0.58 will be our loss, right?
0.5. Yeah, yeah.
Lot size is 100. So you will be losing 100 into,
$58. 58. $58. Yeah.
yeah,
Okay.
yeah, total loss. Right. Second is 17.4, right?
17.4 minus 17.080,
Hmm.
30. Yeah.
17.4 minus 17.08, correct?
32. Yeah.
So profit will be 0.32, like this,
No,
right?
that will be a loss, right? Like 32 will be a loss because of 17.4.
No, it is profit, right? If it expires at 17.08, then you will be net to net. But
Oh, right.
now the option is expiring more than that, right? So that will be a profit,
Not
point
more.
0.32.
Oh, correct, correct. Got it. Yes. Yeah,
Yeah.
yeah, yeah.
Right. So
So
your
profit will
profit
be
is 100 into
$32. Yeah.
32 dollars, right?
Okay.
So in case
Here
of
80,
80,
8.82.
0.92, right?
0.92, sorry. 92. Yeah.
Yeah. So
So
you will be
92.
having $92.
Okay, okay.
So whatever the price is, it expires below 16.5, you will get zero refund. Below or
Right.
16.5 or less than 16.5, then you will get zero.
But the premium 0.58 will be lost premium.
Yes, yes.
Okay.
Full amount will be lost, right? Like minus
Right.
50 will be in a loss of,
Correct.
if it is,
58.
yeah, if it is expires at 16.5 or less than 16.5, then you will be in a
Okay.
loss of $58.
So which means that on before Friday, this is for sell or buy actually?
This is buy. We are buying because we have considered the
Buy.
uptrend, right? And we have considered the call price, call option.
Okay. Okay. Okay.
So that we have to decide based on the charts. We have seen the uptrend and we
Oh,
decided that we are going to buy a call with a strike price of 16.5.
okay. Okay.
Right.
So it's
So this
actually
is
it's called a long option buy, right?
long naked option. We have many strategies to discuss like long strategy, short strategy. This is single lot, only the
Hmm.
naked call option, naked. This is called naked
Okay.
call option buy.
Okay. Single lot. Okay.
So you would have paid amount whenever you have purchased it, you have paid 6.58 into 100. You would have paid $58
Correct.
at the time you have purchased one lot, right?
Okay. Right.
Correct.
So if this didn't before next Friday,
Hmm.
if we should exercise, or it automatically will be exercised at the end of the day.
I
We
am not
should.
sure about I'm not sure about there, but here we have to do it manually in stocks. But
Oh, I see.
but in index it
Okay.
will be done automatically in indexes, but in stocks we have to do it manually.
So what happens if we forget on Friday? Like forget means like
Yeah.
by unknowingly we miss it
So
on
we have
Friday
to
before
pay.
Friday.
So we have to buy the stocks. So
Oh, I
you
see. Okay.
so in that case, if you had one lot, you should buy 100 quantities of this stock.
Okay. So that means that they will automatically probably buy and say, keep it for us.
Huh.
The brokerage.
Brokerage, and there may be some penalty. I don't know about there. Like they may be charging
Okay.
some penalty or how is it?
Okay.
So
Okay.
that you can check with your broker.
Okay. So
Okay.
if the stock moves on the other side, we cannot come out of it, right? So once we buy it, that's it. We have to
You can
hold
come
it.
out of it. Yeah, that's what I'll just explain you from the chart, like how to use the stop loss also. This we have spoken about the targets, right?
Oh, yes, correct.
So
Yeah.
I'll tell you when to exit also
Okay.
because we don't want to book all the losses, right?
Yes. Yeah. Can you show me the chart once again? Just like
Yes, yes. One second.
the gain and loss, I will just note down. This Excel sheet actually.
Okay, Excel sheet also.
Yeah.
Yeah. Now is it visible?
It's still loading.
Okay.
Yeah, it is okay now. Yeah. So first 0.
See, for options, you have to do more work actually because you have to check the hourly chart as well as the daily chart
Okay.
to get more accuracy.
Oh, okay.
Because sometimes the hourly chart may tell you that you can buy, but the daily chart will not tell you that you should buy it right now.
Right, right. Yeah. Yeah, this looks good. We can move on.
Okay, so this is clear, right? Now
This is clear. Yeah,
now
yeah.
we'll talk about stop loss, how to use the stop loss.
Okay.
Stop loss and targets. See, targets we have decided based on this Bollinger Band, right?
Yes, yes, yeah. So we only Bollinger Band is required in this case, right? We don't need to see any other
Yes.
indicators.
We can see this is the particular use case in which we are using only the Bollinger Band, but there may be a different use case in which we may need to use this pivot also.
Other, okay, okay,
So that I will explain you. If we see any other use case, I'll explain you that also.
okay.
Okay. So see, in this use case, our stop loss will be here.
Correct. Okay,
Once the stock price goes below 16.07
right.
and it closes, the
Correct.
it has to close on per hour basis.
Correct.
Below
Yeah, okay.
16, then we will exit our trade.
Right. Okay.
Yeah. Okay. And second option that you can use it like you can use the risk and reward ratio also.
Okay.
Since we
That
are
says,
buying ATM, right? At the money we have purchased, we can use risk and reward ratio like let's say 16.5 premium, right? And
okay.
target is 17.5, correct? Like 1 rupee.
Right.
You're taking a reward of 1 rupee here, right?
Yes.
Then you can
So
consider a
point,
stop loss of like zero point 0.5 or
point 5. Okay.
0.25 or 1 like that you can consider based on your risk appetite. So that is one
Okay.
more way to do it.
Okay. Okay. Stop loss will be like half of the target reward.
Because like 1 is to 2 risk reward ratio, right? You can consider.
Yeah. Okay. Okay. Yeah.
Okay, clear stop loss and targets.
Yeah. That's good. Yeah.
So now we can see a second use case, like in this scenario, right?
Yeah.
Here at the top, you can see, right? Where when the candle is at the top, right?
It's actually, I'm not seeing anything.
Chart is not visible
It's not visible actually.
now.
It is still it's still loading.
Okay,
Yeah. Now it's good.
okay. So we will take one more use case wherein our candle is at the top of the Bollinger Band, right? Here.
Okay. Okay. This for downtrend.
This for downtrend.
Okay.
So, or can we choose any other stock? Because here we have to see the historical data. We have to see on the daily chart also. See, the date was 14th of July, right? 14th of July.
Yes. Right.
The hourly chart, and we can see the daily chart also of 14th of July. 14th of July.
So what is in the background that R1, R2? What is that actually?
Where?
In the chart, like there's a S1, S2, R1,
That
R2.
is pivot. Now I've explained you about pivot, right? Pivot
Yes.
points,
Okay.
support and
Oh,
resistance.
pivot points. Okay.
Support
Okay.
and resistance. Right?
Okay. Okay. Okay.
So
Oh, so
14
that we
July.
can do it on the chart itself. We can have it, right? Like permanently in the chart.
You can have it permanently. Yes.
Okay. How do we add it? Indicate by indicator.
See, once you go to indicator, here you will get pivot
Pivot.
points. Standard first one, pivot point
Oh,
standard.
pivot standard. Oh, I see.
You
Okay.
can add it. And
Okay.
see, if you are trading here, then no need to bother about the previous pivot points. These areas
Okay.
are not useful. Only the current one you have to
Okay.
check these lines, the current line.
Okay. Okay. I see. Okay.
And even you can, if you want to change the settings, you can change from your settings, right?
Okay. Okay. Yeah.
Visibility, right? Inputs. These are the inputs. So
Okay.
here it is showing you five support and five resistance, right? So five support
Okay.
and five resistance may not be needed, so we can use two support and two
Two
resistance.
subs. Okay. Okay. Closest one we can use.
And now the chart is
Okay.
also clear. Earlier it was like hodgepodge and all. Now the chart
Yeah.
is
Yeah. Right.
so 14 July. You can see that the chart was here, right?
Okay.
So it was a uptrend. Daily chart
Right.
was showing uptrend, and this is also showing uptrend. But the thing is that both of the candles were at the top of the Bollinger Band, right?
Yes. Yeah.
So we have to try to take a short position there.
Okay.
So how do we take the short position? We can consider our blue line as the first target and the lower Bollinger Band as our third target, right?
Okay. Yes. Yeah.
So here the price was around 20.5
Okay. Yeah.
and our target is around, what is this?
19.
19. Okay.
Yeah.
So now we have to see the strike price of 19 PE put
Okay.
because we
So
are
here,
going,
just directly below that green candle or red candle, that is where we need to take, right?
we have to wait for this candle close and we have to buy and short at the high. If price crosses the high, we have to buy, and if price crosses below the green candle, then we will take short. So here we have to take a short position.
No, I'm just checking, like, that the 20.5 19. So before that Bollinger Band, like, we can know how it is created. So that is below the red candle, that is where we need to take T1 and T2.
Here we have to take the position here, but our targets will always be this only.
Okay. Now what I'm saying is that you're keeping it bit right, but it has to be, the target has to be just below that red candle, right?
Yeah, yeah. Here
Not, it's
only because
still left. Little bit, if you move the cursor bit left hand side. Yeah, that is where you need to take the T2, right? Because that is where now the candle is formed. And
yes, yes.
now,
The blue line. Yeah, whatever the price at that time, blue line, you have to take that price.
okay,
Based on
yeah,
the,
yeah, exactly. Okay,
yeah.
got it. Yes, yeah, okay.
Because right now the chart is already formed, so
Formed, yeah, yes.
I'm
Right, right.
I'm able to see 19 only, so that is why I'm considering 19. But you have to take the price at the blue line only.
Correct. Got it. Okay. Same as the below
Yeah, yeah.
T2 also.
So
Okay.
just for your for you to explain, I am considering like 19 years.
Right. Okay, okay.
Okay. So at the time 20.5 is our price, then we have to see the strike price of 19 PE,
Oh,
right?